FTSE 100 from an intermarket analysis perspective. The obviously end of day analysis for Monday, the 10th of November 2014. Okay, so basically my analysis was based on was expecting a drop today. Okay. And obviously that didn't occur. Now I did go short overnight, as my subscribers will testify. I went short on a Sunday night going into this morning, and that was based on the theme of weaker Chinese data, basically looking for momentum to be bearish earlier on. Obviously then we could, and obviously there was a H&S formation of FTSE set up on a 60-minute chart and a 10-minute chart with a gap fill below. Okay, so and given the fact that there's concerns obviously growing with Palestine and Israel, some Israeli Arabs I think there were 2 more murders today. I think there were 2 more people killed. So certainly escalation there. Obviously the Iraq situation with an additional 1,500 troops, and adding the fact that you've got the Ukraine situation that's still brewing as well. Okay, so and Mr. Putin obviously came in today. Certainly did alleviate some concerns as I put with regards to the ruble, obviously allowing it to float, etc., etc. So, and also you did have the OPEC try to intervene as well to stem the oil price slide. It hasn't worked. It did actually initially short cover up to $80, and it's now fallen back $2.50 again. So that certainly isn't working at the moment. But okay, so my bias at this very moment in time is certainly bearish, given the fact that the FTSE is at 6610. But that's another story. Okay, I'm not going to discuss that now. Obviously subscribers have access to my active trades at the moment. Today, a fantastic day, absolutely fantastic. 115 points for the day, as subscribers will testify, as all trades are taken in real time and shared via WhatsApp. Okay, and updated via email with analysis and an explanation as to why I've taken the trade and the setups involved. Okay, so you get TAFA and intermarket analysis, and hopefully the idea is that you observe my trades and you learn in real time. Okay, so why did the FTSE move higher? That's what everybody wants to know, because given my previous video. Okay, well, basically the reason why the FTSE has moved higher, number one, and is basically because the Hang Seng and the Shanghai have obviously surged higher. At one time, the Hang Seng went above 24,000. Okay, so that was quite a substantial move. It was up by almost 2.5% until it obviously sold off into the close. The Shanghai, as you can see, is up by almost 2.5%, given the fact that the futures are certainly higher. So it's up by almost 2.5%. So when you have the Shanghai and the Hang Seng surging higher based on the interconnection of the 2 indices, and there's news flow you can read on Reuters with regards to Shanghai and the Hang Seng. So basically the concept is that more people obviously have access or can expose themselves to Chinese equities. I mean, this is a story here. I can just load it up for you on my Reuters icon platform, although it is slow recently. I'm not sure why. I need to get this updated, and it's probably an update that I need to implement. But anyway, either way, it's that was the whole sole reason why obviously individuals are exposed to that. Now,
hello, I'm Wei Li, investment strategist from BlackRock. Click here for the weekly emerging market update.
1 second. Okay, so China stocks posted strong gains on Monday after regulators gave a firm date for the launch of the long-awaited Hong Kong Shanghai stock.
Time for today's bar chart. Wake up, everyone. How worried are you? How worried should we be? How worried is the long end of the US bond market about higher US interest rates, or the potential for higher US interest rates? In short, if you look at how 30-year bonds are faring, not too worried at all. This is the top chart. That's the yield going back to the beginning of the year. Government bonds due in 30 years have advanced more than 20% this year. The yield at just over 3% is just off a 1.
I need to work out why this voice is coming. Okay, I've turned that off. Okay, so basically that's the reason why. So number one, you had the Shanghai and Hang Seng higher. Obviously that means that the FTSE, given the fact that the FTSE is a commodities index, and obviously China is the basically number one consumer of commodities in the world, and if you have an index higher based on that information, obviously then the FTSE fails to play out the H&S formation. As I had explained on the 60-minute chart, you had this formation that I was alluding to. Okay, so a potential setup was in the making. Okay, so you had the failed bull flag and then you had the bearish engulfing candle. Obviously price action was supposed to consolidate within that red candle, and obviously the H&S formation triggers, thereby closing the gap below, and obviously that didn't occur. Now, one of the reasons why that didn't occur, number one, like I said, was Shanghai and Hang Seng higher overnight. Okay, add in the fact now that the inflation data also in China came out tepid, which means that obviously gives the PBOC more room to obviously maneuver and implement stimulatory policies in order to alleviate any growth concerns, okay, or prevent growth from falling to the or below. I think the site is at 7.5% target, currently running at 7.3%. So that's basically the reason, okay. Now, we did have Circle today. Obviously, Circle was down, I think, by almost 30% at one time, I think, if I can remember correctly. And that obviously did put the FTSE under pressure earlier on. But we certainly managed to shake that off and trade higher. Okay, so like I said, China dictates. Even though we had the Nikkei lower overnight, I mean, if you bring up if I just load up the Nikkei, you can see here Nikkei down by 0.6%. And yet still the FTSE was very impressive. We had Circle was a day's worst before, down 32% after slashing its full year adjusted operating profit forecasts, etc., etc. Okay, we also had Lonmin, which was a heavy mover, and then we had Tesco, obviously the retail stocks, which I'll discuss shortly. And as you can see there, the day's top performers for the FTSE 100, you can see it's all supermarket, retail, etc. So you've got Marks and Spencer's higher. You've got Tesco higher. You had, I think, you also had Sainsbury's in there to a large extent. Well, basically, Sainsbury's was down because of the profit forecasts on Wednesday are going to be negative. So basically, you had Tesco obviously higher, so that was helping the retail side of things. And I'll discuss the retail side of things shortly. So obviously, given the fact that Tesco has been one of the main reasons for the FTSE falling. And obviously when that rallies, and that obviously causes a reversal in sentiment and causes a reversal in price action as well. Okay, so that's basically the reason. And like I said, Mr. Al-Baradi, is it Mr. Al-Baradi? I can't remember now. But basically the OPEC members came out and basically were pro or positive oil. All comments were positive for oil. And obviously that helped the oil price move higher, which in turn obviously helped the FTSE itself as well. So stocks such as BP and Shell obviously higher, and given the fact that they're heavily weighted in the FTSE, they move higher as well. So as you all know, given the fact that my reason for going short was based on China obviously, and the weaker jobs report from Friday, and given the fact that the Nikkei was certainly focusing on the jobs report, but because China was bullish overnight, China dictates, as they always say, as Napoleon said, it's like a sleeping lion or a sleeping tiger. I mean, if once you awaken it, the whole world trembles, and that's exactly what happened. We had all the shorts or the bears were trembling, basically, and obviously the FTSE went into interstellar mode. Okay, hence with reference to a new movie that's out. Okay, so basically you can see here, these are the main movers, the main ones that are focusing on the downside, volumes, etc., etc. You can have a look at that at a later time. Okay, so basically where we're heading now. So any news out today with regards to the FTSE 100? No, nothing really of any importance. Even from the US, nothing of real importance that was market moving in terms of the economic data. I mean, I could pick up a calendar and show you if you I'll give you an observation. Here we go. So nothing really of any importance. Okay, other than the fact that we did have the consumer confidence, obviously slightly better than expected in the Eurozone. Mr. Carney did speak, but it was more about bank bailouts and the taxpayer no longer obviously funding them and helping them and rescuing them, which really is slightly hawkish. I mean, not hawkish, should I say, slightly negative towards the banking sector, and we'll see how the banking sector did. Okay, so that's basically it really. Obviously we've got some Kiwi data out later on, and obviously Chinese inflation data was the main focus for the day. Okay, so that's basically where we are with regards to that. Okay, so the US markets as well, nothing really in terms of economic data that's really market moving for the US, to be honest with you. It's all about the Japanese yen at the moment. Okay, now let's have a look at the Japanese yen, because that's what the main one of the other variables that I expected would cause a sell-off in the US markets, which in turn would cause a sell-off in global markets, etc., given the inter-market relationship there. So if I bring up a chart of the USD JPY, as you can see here, the 4-hour chart was a focus on that particular very moment in time. Okay, so basically we have bounced off this obviously horizontal support level, and we are looking at potentially making a lower high. So that's where the focus remains. Although we have bounced much more than expected, it certainly seems to have held that pivot low from the 6th of November, and obviously we're bouncing here. Okay, we just bear in mind that we've broken out of the bullish channel. So yes, okay. So I had a swing long on the FTSE from. So I actually closed it for plus 60 today on the fundamental analysis service. That is for free. If you want to be on that, just email me and I'll add you to the WhatsApp list for that. Okay, that is certainly free. I've actually gone swing short on the CAC on that swing from 4 to 10. Okay, for those of you that are interested in the swing trading service. Okay, but at present, given the fact that central banks dictate, it's certainly very hard to forecast anywhere above and beyond a day or two at this very juncture in regards to this market. But we certainly try. We'll certainly try. Okay, so stop losses are always in place if we're wrong. Okay, so basically this is the USD JPY. We certainly have moved higher, even though there has been articles and talk about the BOJ in the Wall Street Journal. I think recently it was tweeted, and even last night I was reading with regards to how Mr. Kuroda obviously is certainly getting desperate. Okay, and so that's certainly something to keep an eye on or keep a focus on if his own cabinet is obviously going against him. That's certainly an area of concern. But one of the biggest concerns for me really with regards to QE from Japan is why has gold not gone higher? Why has copper not gone higher? Why have commodities not surged higher? That's one of the biggest problems, because QE obviously feeds through to commodities. Adding the fact also with regards to the Aussie and Kiwi. I mean, the Aussie and Kiwi have been hammered again. Okay, you can argue with regards to the dollar effect. The dollar obviously strong, but realistically, there wasn't anything really from the jobs report that actually helped the dollar that wasn't already baked in the first place. Okay, the average hourly earnings, etc., were weak. From my perspective, we missed target in terms of the 235k expected. We actually hit 215. Yes, obviously we are still growing above the 200, but nothing concerted enough for the Fed to be extra hawkish. So if anything, if we dip below 200, and then we're back to square one again, and we're talking about QE4. Okay, adding the fact also as well with regards to the dollar index moving quite high considerably in a short space of time, that again will hurt the export sector. Okay, so you can see here the 200 MA held. We did have this potential H&S formation on the dollar, and obviously still in play. We'll keep an eye out for that. No, it certainly seems to be in resistance for now. Now the other concept as well with regards to the yen, and this is, I've discussed this, and I've actually in my last we still seem to be building a base. Okay, we're building a base and looking for a potential breakout for those gaps. So that will basically a top in the USD JPY will cause a top in the actual global markets, and obviously the FTSE as well. Okay, so now that we have that information, and given the fact that, like I explained, the Nasdaq also, if I just bring up a chart of the S&P 500, bring this up for you. S&P. Here we go. Okay, so although we have put in a doji and it has negated that doji, I want to see where this market closes. Obviously, if you hold that purple line, then from a technical point of view, we certainly have an argument to short. The H&S formation obviously failed, given the fact that, like I explained, China. Okay, so in order for that H&S to obviously have come into effect, for the right shoulder to have come in and triggered, then we had to have China obviously bearish overnight, and that wasn't the case because it totally ignored the weak data over the weekend and chose to focus on the infrastructure projects they have, i.e. the Silk Road or Silk Route that they're talking about, and also given the fact that obviously the amount of money, obviously the interconnected nature of the Hang Seng and the Shanghai obviously being positive for demand for equities there. Okay, So that's all. They're basically the factors that obviously cause this Nasdaq to fail. And obviously the USD JPY rising and not falling as expected. So that's another factor as well. Okay, so where are we headed now? Now that we know that information, where are we headed? Okay, if we start with the FTSE Volatility Index. FTSE Volatility Index on a 10 minutes is into support. Okay, so that indicates obviously there's an inverse relationship between the volatility index and the FTSE, so therefore FTSE is into resistance. We have put in a bottoming tail here. Okay, 7th of November, that bottoming tail is still holding. We did put a potential bottoming tail in the morning, and certainly that holds for now. Okay, so from my perspective, certainly looking still bearish, given the fact that oil has dropped from $80, gold has dropped from $11.80, dropped $20, oil down to $2.50. Aussie USD and Kiwi dollar both dropped, euro dropped, so the dollar certainly moving higher. So commodities are into pressure, so therefore the FTSE should be into pressure, based on that understanding. Okay, now we have had talk with regards to the telecoms, internet sector being regulated by Obama, so that again will be negative for Nasdaq. That will have a fundamental argument there to short the Nasdaq. Okay, so there's certainly a lot of arguments out there, and obviously watch out for the USD JPY, because that's certainly dictating risk and sentiment at this very juncture. Okay, so FTSE Volatility Index is into support. That means FTSE is into resistance. Looking at the daily chart, the FTSE 100 inverted head and shoulders obviously still remains in play. The 50 MA is certainly, as we've certainly gone through that now. Okay, the next resistance level will be 75% fib, obviously 200 MA. But having said that, that topping tail certainly seems to have held just about 6,610, and hopefully when I go to smaller time frames that will make more sense. Now FTSE 250 again has held that previous support equals resistance, so we certainly need to be observing that. Okay, with regards to that, the FTSE 350 we have broken through, but we are into the next resistance zone now, so that's something that we have to observe and watch out for. This has an inverted head and shoulders formation as well, and it can certainly go based on the fact that the Shanghai and the Hang Seng are certainly higher overnight, but given the fact that the Nikkei is weak, that is a cause for concern still. Okay, now that's something that I would certainly keep an eye out for. At present, the Chinese market has a catalyst to move higher. Okay, given the fact that the Chinese market is playing catch up anyway, with regards to the US markets and the European markets to a large extent. Okay, but my focus will still be that the Chinese market certainly has a catalyst. What's the catalyst for the US market? Nothing. Okay, what's the catalyst for the European markets at this very moment in time? Nothing, given the fact that QE, or there were comments, anti-QE comments earlier on today as well, and given the fact that the euro certainly surged to the 1.25 level, and the 1.24 level certainly seems to be the floor for now. I mean, if you bring up a chart, the euro USD, one of the euro USD is into support, you have an inverse relationship between that and obviously the equity market. And you can clearly see with regards to the euro USD now, you have an inverted head and shoulders formation, given the fact that the weaker data out of the US on Friday would certainly help the euro side of the equation. So you've got a left shoulder here, you've got an invert head here, this is your right shoulder going in at present. You're looking for a potential move higher. Okay, so this is going to be very, very interesting. So if you look at our Fibonacci retracement tool and try and utilize that, so we're into that 61% support of the right shoulder. So once that right shoulder kicks in, okay, then obviously we move higher, the euro moves higher. What does that mean for European indices? We're into trouble. Okay, we're into trouble because the euro moves higher, obviously hurts exports. So can you see how the intermarket analysis is giving you a outlook into the future? Basically, it's stating that there's an inverted head and shoulders, pattern. Okay, on the euro, the USD JPY chart certainly seems to be into resistance territory. Okay, add those two variables together, it basically means risk off. Okay, given the fact that we rely on the yen, given the fact that we rely on the euro, okay, for exports, and both are obviously moving in the opposite direction, i.e. the yen moving higher hurting Japanese exports, and the euro moving higher hurting obviously the European exports, which in turn turns into a double whammy, given the fact that oil prices have dropped now to $77 a barrel, now down almost $3, gold is down by $20, copper's under pressure, etc, etc, etc. So you add all that together, it certainly doesn't bode well for the FTSE 100. Having said that now, and I've been talking now for some while, the argument to short the FTSE is certainly getting stronger and stronger, and I'm actually going to take a trade on the FTSE 100 myself right now. Okay, given the fact that the FTSE currently is trading at 6612 on my chart at this very moment in time, so I'll send this out to subscribers as well. That I'm actually going to enter the FTSE short here at 6612. Okie dokie, so this looks good at 6612 given that analysis. Okay. Excuse me. Okie dokie, that certainly looks good at 6612. Okay, so watch out for that. So that's an entry there at 6612. Send that out, bear with me. Bring up my chart on the FTSE, 10-minute chart. Okie dokie, so I'll be discussing this as well. Okay, so the FTSE chart on a 60-minute basically looks like it's into a double top pattern. Okay. Okay, into a double top pattern. So the HNS obviously failed. So obviously a failed pattern equals a motive move in the opposite direction, folks. Always bear that in mind. Okay. Now the reason why obviously I've taken this FTSE short is mainly primarily obviously based on the fact that the oil prices have obviously fallen $3 now from the high, and that obviously does exerts pressure on the FTSE, given the fact that that was one of the catalysts for moving higher. So always remember that the catalyst that causes the market to move higher, if it reverses, will also cause will also be the catalyst for the markets going lower. Okay, so 60-minute chart, double top pattern that we have there. Okay, so if you go to a 10-minute chart, okay, 10-minute chart, obviously we're into horizontal resistance here and into that 6610 double top. Now we do have an unfilled gap below, so we've left an unfilled gap below here at 6565, so watch out for that. And obviously it's a far cry now, but you have a gap at 6450, so there are two gaps that we certainly need to observe and respect. Okay, so double top resistance here at 6610 region, and basically looking for that to play out. Okay, especially given the fact that the Nasdaq is into resistance, given the internet attempt at regulating the internet. Okay, i.e. Netflix. Okay, so that's going to be very interesting. Okay, folks, so this is basically the summation on the FTSE 100. Now I can look at the individual sectors. Now, as you can see here, there's the ever since we closed this gap on the pharmaceuticals, then this remains bearish. Hence the reason why I've taken my FTSE. Now, if I look at the banking sector, as you all know, Mr. Carney was talking about the end of an era of bailing out the banks. So obviously you've got a double top in the banking sector, hence the reason why this is going down, and you have an unfilled gap below. If you look at the actual sector here on a 60-minute chart, you have this unfilled gap, and obviously Mr. Carney has given you a catalyst, given the fact that he was talking negatively with regards to bailing out banks. Obviously that alone is a catalyst, and should send a shiver down the banker's spine. Okay, so that's basically negative. Okay, with the banking sector. Oil and gas, as we all know, we've held this ever since we've closed this gap. We've been struggling. We've got a triple top resistance, given the fact that oil's dropped $3 a barrel, $3 given from 80 to 77. Obviously that's negative, and that needs to be discounted in. Okay, so that's negative for the FTSE 100. Retail sector, yes, we're into double top on a 60-minute chart. Tesco's had its heyday. Certainly have factored in every all of the bullish case or bullish scenario, and certainly are into resistance. So remember, Sainsbury's reporting on Wednesday is going to be negative. That will obviously take the shine off the retail sector. And as you can see already, we're down to 2.6% today already. So again, that's negative. I mean, you had Dixon's down, Royal Mills down as well. So overall, not looking good. Okay, so with regards to the sector, now everything certainly is indicating and pointing towards resistance. Now, if I look at the building sector still remains weak, as you can see there. Building index, okay, certainly looking weak and remaining weak. Okay, the mobile sector, like I stated before, given the fact that Mr. Obama is trying to regulate or implement some type of legislation, then obviously the mobile sector is going to come under pressure, okay, because it's all one, it all works in one tech sector, really, it's all one, and obviously that will hurt the earnings there, and obviously that will reverberate, and you've got a H&S formation or on here as well, so that's obviously negative for the telecom sector, okay. The last, well not least, the last index that we're going to look at now, obviously you've got a hotel sector, triple top resistance, mining sector. We've obviously been weak today regardless, and we are making this H&S type pattern. There's your left shoulder, okay, you're looking at head, then you're looking at a right shoulder here, and obviously down you go, and you've got an unfilled gap below that you need to close, okay, so you've got that unfilled gap there. Okay, so overall all the sectors are looking weak, looking bearish, therefore FTSE 100 equals timber. Okay, one of my old sayings. So risk on, risk off. On this occasion it's certainly risk off. Wax on, wax off. Goodbye.